Thank you, everybody, for joining us today to participate and attend our Mifos X Loan Module showcase, which is primarily going to be led by Bharath. But we're eager to have you join us today, as we're looking forward to sharing with you the functional enhancements that have gone back into the loan module over the course of the past year, as well as forthcoming items that are in the roadmap that you can look forward to. Let you move to the next slide, Bharath. Yeah, so I think everybody's familiar with both of us, but for those that don't know me or Bharath, my name's Ed. I'm the president and CEO of the Mifos Initiative, and I oversee the organization and how we aim to drive the ecosystem, building and cultivating solutions and contributing back upstream to our open source digital public goods that we maintain. And I'm also the project owner and main lead of guiding the relationship with the customer as part of the Pepper Soup project. And then Bharath is our lead business analyst on the project, as well as our lead implementation and business analyst across the community. And he's our resident expert on the Mifos X product and will be guiding us through the enhancements that have gone into the loan module today. So just in terms of what we're going to cover, I'll be sharing a little bit with you all briefly at the onset, just giving a slight overview of the project background, but we touched on that on last year's webinar around the loan module. And then Bharath will dive in first off, looking at how our loan module has been evolving over the years, and then giving a brief recap of the phase one enhancements that we covered in the webinar last year. And then the majority of today's talk will focus around what's gone into the loan module throughout the course of 2025, starting with a brief overview and then a deep dive in each of the specific features. And then based on the time we have available, we might demo some of those features, but we do want to have a glimpse into the roadmap of enhancements, not just to the loan management aspects of Mifos X, but lending in general. And then we'll reserve time for question and answer at the end. So if you do have any questions, please put them in the question and answer tool, and then we'll get to them towards the end of our session. Yeah, so just a brief recap. So the Pepper Soup project we introduced last year, but it's a project that Mifos has been leading since the end of 2021, working with a large global fintech to help them re-platform a number of their different credit products on top of Mifos X and Fineract. So Mifos oversees the project, guides the delivery team, and ensures that all the contributions can go back upstream. And so there's a mix of different entities across the community that are helping to deliver and design these new features, but it'll be Bharath and myself today that are guiding the overview. Yeah, so last year we gave a glimpse into where the project started with initially a proof of concept to demonstrate scalability, and then we worked closely with the customer to implement these architectural changes to enable the rollout and support of the buy now, pay later, zero interest buy now, pay later products that they had across a number of different markets, starting in Europe, then transitioning to the US and other markets around the globe. And then throughout the course of last year, and a good majority of what we're going to focus on today, was adding in additional support on top of the progressive loan module to support both longer term installment loans for consumers as well as merchants. So that's where Bharath is going to focus a lot of today's presentation around. And then throughout the course of this upcoming year, we're aiming to work on introducing a brand new category of loan product, which is more flexible than the term loan, which we'll dive into a bit further. But this is just a high-level overview of the products that we've been helping this customer migrate that have been the source of the new functional enhancements that have gone back into the loan module. And then, Bharath, I'll say a few words on the next slide and then pass it on over to you. So.
Yeah.
Yeah, so Bharath's going to dive deeper into here, but we just wanted to give a high-level overview of the range of different loan products that are supported within Mifos X and the Fineract backend. And ideally, over time, we'll continue to add additional loan products that are supported. And we're also envisioning to host a future webinar where we do a more in-depth walkthrough, product by product basis, looking at that through the UI and helping to categorize and better delineate the different products and different lending verticals that can be supported within Mifos X. But at a high level, what Bharath's going to show you is the products that were supported by our legacy Cumulative schedule loan module, what was enabled by the progressive loan module launched last year, and then what we're looking forward to being able to support and add as we add support for more of these open-ended loan products within the Mifos X and Fineract capabilities. But on to you, Bharat.
Yeah, thanks for introduction, Ed. Hello, everyone. So basically, as Ed said, we made a lot of progress with respect to product support what Mifos X provides. So initially, as you know, until 2025, since like Mifos X was mainly focused on MFIs and group loan, our product was very limited in supporting other type of products like business loan, housing loan, education, agriculture, etc. So basically, with the change what we made in the last year, which we already demonstrated in webinar one, so we were able to make a lot of changes with respect to schedule handling, strategical allocation of repayments, and multiple tranche enhancements. All those things enabled many organizations to use Fineract or Mifos X to support buy now pay later kind of loan products, digital lending. So since it's flexible and possible to configure any type of loan strategies, so digital lending is possible, and housing loan can be more structured and easy to implement with the transfer changes what we have made, similar to education loan and business loan. So moving on to 2026, as Ed mentioned, so we are mainly focusing on the open-ended loans, like a line of credit, working capital, so that like we will have a full cycle of loan products supported in Mifos X going forward. So along with that, we are also enhancing some of the buy now pay later product what we introduced last year to support interest-bearing buy now pay later long-term loan products as well, along with some of the merchant capital loan products which usually uh, organization provide to the merchants. So this is the quick overview about the product supports, what it was before, what we implemented first, and what we are working on currently. So the features what I'm going through show next are all gonna help us in like supporting these products buy now pay later, more type of configurations in buy now pay later and merchant products, and some parts of line of credit and agricultural product support as well. So if any questions, as Ed mentioned, you can just put it on the chat screen, or you can ask it at the end. So the first is a quick recap so that everyone will be in sync. So initially, what we delivered, major changes what we made is with how the interest is calculated and allocated for the schedule when the repayment comes in. So um, one important, like the foundation is the progressive schedule and advance payment allocation. So the previous support was cumulative, meaning whenever there is a multiple disbursement, system used to go back and recalculate the installments of the first disbursement as well. So that is the first thing what we tackled. And so right after that, the second most important was the advance payment allocation, which is nothing but the flexible strategy where user can simply drag and drop the allocation priority they need between the principal fees or the interest portions of advance or the due or the overdue amounts. So I'm gonna go a little deep on these topics in the coming slides, but we did some part of advance payment allocation in the phase one, but in the phase two we enhanced it further to support some more excess payment handling scenarios as well as interest bearing scenarios too. So, and we made some changes in multi-disbursement, as I said. So previously system used to support only fixed plan tranches. Now we have enhanced flexible disbursement options on the same active loan account so that complex scenarios or disbursement flows can be supported. And charge off is now a new feature introduced in the last year, where it works in the same write-off way, where accounting level the loan is written off, but at free portfolio side the loan will remain active and due for collection. And as we know, like initially we had a very minimum arrears or delinquent portions, but we introduced something called as delinquency management, where organization can build their own uh, delinquency buckets with the overdue days configured, and it can be configurable at loan product level. So each loan product can have its own delinquency bucket configured, so that system itself will check the overdue status of each loan and move the overdue loans to the respective buckets accordingly. And one more depth what we made there is we also introduced something called as installment delinquency, where not at the loan level but installment level, now the system can track, okay, the installment 1 is in delinquents bucket 30 and installment 2 is in delinquents bucket 0, and it's overdue in so and so dates. At installment level we can now track the delinquency. So another important change what we made was around performance. So since like buy now pay letters are a huge volume transaction oriented products, so we had to make a lot of changes with respect to speed and processing of transactions and bad job at the system level. So we also introduced new transaction types, which are relevant to buy now pay later. Example like goodwill credit or refund type of transactions. And we introduce a new modules of restructuring called re-aging and re-amortization, where schedule can be restructured for a overdue loan when the client requests. So this is good thing what we have introduced along with these things. So this is the quick recap of what we did last year, and it was presented in the first webinar what we conducted last year at the same time. Okay, so come shifting to this year's changes. So we have categorized this year changes into three main categories. So the first one is, as I said, like enhancing the buy now pay later product support to support more broader product groups in buy now pay later category. So example is like long-term interest-bearing loans. And the second one is the backbook migration support. Since many organizations are adopting, we also had an like scenario to support the existing loans from their older system to Finarac. So to support that, we had to make some of the changes so that the loan once migrated existing loan to the Mifos system, so it works the same way and there won't be any inconsistency in values or figures. Also, along with that, we have introduced something called as migration tracking, where system will track the migrated loans in the separate tables, and it will have its own audit trail for the migrated loans. And the third one, which is still in progress, the development has recently started, which is nothing but the merchant capital lending, also a part of the open-ended loan product what we are planning to support. So quickly to say, like merchant capitals are not like a typical loan, so they are flexible cash flow based model, where like repayment interest is handled dynamically, and the loan will not have a fixed tenure or anything. So this is work in progress. In the coming slide I will talk more on that. Okay, so this is since we had introduced a new strategy, so we had to make sure the existing features of the loan work with the progressive strategy, so that more and more organization can adopt to progressive strategy, because progressive strategy is tied up to advance payment allocation, and we saw like the organization were keen and interested in using it, but they were not able to use it because like some of the features, existing features which was supported by Cumulative was not working was with Progressive. So this is the that is the time when we decided, okay, we have to take this also into consideration, so that existing features of Cumulative also we will try to support in Progressive. Some of the uh, support we already have done is like now we support interest rate and recalculation. So as I said before, and previously we when we introduced interest rate, we only supported declining interest rate, but we later enhanced it to support the flat type of interest calculations as well. And so when we made changes to the tranche disbursements, we only supported Progressive for new changes what we made for tranche disbursements, but we also um, so now supporting the planned tranches as well. And and coming to the charge product, it was very limited due to time constraint. When we developed, we only supported specified due date charges initially. Now the Progressive strategy also support to have attached loans with installment charges, disbursement charges, etc. Also, like moratorium periods. Basically, initially there was no moratorium requirement. Hence, like moratorium is nothing but like grace on principal or interest. So those also now Progressive strategy will support. So gaps, we still have few things to cover to make sure like Progressive strategy reaches more audience, which is like we still need to support the variable installment options, which is currently available in Cumulative, similar to fixed EMI options and the top up loan and collateral. So these are some of the known gaps what we have to tackle in coming days. Okay. So the next is the main changes what we have made in this year with respect to the first category, or as I said, like interest bearing support to buy now pay later. The first and foremost in that is the amortization feature, where the principal is amortized into income. So this is one of the major feature what we have introduced. In that amortization, we have two types. One is like capitalized income and the buy down phase. So basically, the difference is capitalized income would be like added to the principal balance and would be considered for calculating the interest as well. Whereas when we create an buy down phase, it will be added to the principal balance, but that amount will not be considered for interest calculation. And so the next is the changes related to interest and schedule handling. We have introduced something called as accrual activity, where at each installment level, system will create a new transaction type called accrual activity with a total interest accrued for that installment period. So this makes life's easier for organization where they want to get the reports or the data as of particular cutoff month or period what they have. And we have introduced something called as full term tranche, so it is also called as delayed captures. So the this also falls under tranche disbursement enhancement category. The importance of this is, or rather the significant of this is, each disbursement will have its independent schedule. So, for example, if a loan has a 6 month term with one disbursement, and if a second disbursement comes after the two installments are paid on that first disbursement, system will again create another extra two installments, so that totally now the loan will have 8 installments. In that, first two installments will belong to disbursement one, the last two installment will belong to disbursement two, and the overlapping installment would be summed up. So I have an example in the slide. I will explain it later so that it will be much clear. And as we know, there is no loan origination feature currently in Mifos X, but we are starting to build on top of it. As a first phase, we are first creating an like a structure where right now we can store the loan origination details only. So that is the first step what we have created, but we are planning to enhance it so that Mifos X will have its own loan origination step as well. And leap year options, this is pure calculation perspective. So Mifos X, whenever we have a product setup, there was no specific calculation type when the leap year is present or not. So when we set the year to actual or a 365 or a 366, so any time of the year when the loan is dispersed, the system used to calculate it on on that particular configuration. But with this leap year options what we are given, we can specify, okay, if the loan was dispersed in 2014 or a 15, so okay, if it is a leap year it will take 366, if it's not it will take 365. So the system will consider the leap year now whenever a loan is dispersed. So two new features we have introduced, which are contract termination and pause resume interest. Contract termination, this is the phase one implementation. What it does is when the contract is terminated, let's say if a loan has a 10 installments, and if the contract is terminated for various reasons, the client is not paying or is a fraud or anything, and the organization decides to mark that loan as contract terminated, and then like all the installments would be moved forward to that contract termination date, and the amount would be pending to be paid as of that date, and no accrual or the interest calculation will happen on that loan thereafter. So pause and resume interest. Right now in the middle of the loan cycle, we can select a particular period where we can pause the interest calculation completely. So it's not the midterm grace. The difference is like in the pause, we are not accruing interest and moving to the future installment. Whereas in grace, we used to accrue the interest, even though it's not collected in the grace period, it used to get accumulated for the future installments. But in pause interest, it works like a like an interest-free period, where for the configured days, the interest would be free or not calculated for that period at all. So these are some of the changes with respect to interest and the schedule handling what we have made. Moving on, so as I think I already mentioned it, advance payment allocation. We made some enhancement to support the excess amount payment handlings, and write off we also enhanced it to support the progressive type of strategy, which was not done before. And interest modification, it was there before under cumulative and the progressive as well, but only thing is it used to support only the flat type of interest calculation. It was under the reschedule option, where user could change the interest rate from a particular date, and system used to recalculate the future installment based on the new interest rate. But it has a limited support before, but right now we have removed those validations. Now interest modification can support both cumulative, progressive, and for both type of interest calculations, whether it's a flat or a declining. And then the features what we introduced in the last module, like re-aging, re-amortization, charge of support, chargeback, pre-closure, all these things we enhanced it further to support interest as well. So now right now when we do a pre-closure on a progressive loan, so the system will recalculate the interest as of that pre-close date, and it will help in pre-closing the loan. Re-aging, re-amortization are restructure steps what we introduced in the previous phase. But we had to make a significant changes on it. I had to highlight because as soon as we took up the interest into picture, there were a lot of scenarios to cover, because re-aging and re-amortization, we are restructuring the schedule, and there are n number of configurations, and we had to make a lot of changes and lot of effort went into supporting re-aging and re-amortization for interest-bearing progressive loan products. So I had to highlight it. And then the charge off, which is nothing but the soft write off. As I said, at the accounting level, we do the write off, but at the portfolio set, the loan would be still active. So again, we enhanced this to support the interest bearing progressive as well. So chargeback, chargeback, what it does is like when we do a chargeback on a previous repayment, so the system will create a credit amount for that particular repayment and add it to the current repayment, current installment. So how it is helpful is like many organization once their account books are closed, so we cannot, and if there was any mistake or a repayment which was added by mistake, system will not allow us to go and reverse that repayment. So in that case, so we have introduced something called as chargeback. So we will go to that repayment, and when we do a chargeback, system will let's say the repayment was 100 which was added by mistake, so system will add that 100 back to the current installment, current date installment, and the user or the customer will have to pay that 100 as of this date, so that the previous repayments or the accounting are not touched, but that missed payment is collected as of the current date. So this again we had to enhance it to support interest calculations and interest chargeback as well. So these are the overall changes what we made. Again, these are all fall into first category of enhancing the uh, progressive strategy to support interest bearing and other type of features. So I will do a feature wise deep dive in. The first feature what I selected was like capitalized fees and interest income. So I mentioned earlier, so basically if you notice here, whenever we add a capitalized interest, so if the loan amount was 100,000 and the capitalized interest is 5,000, the new principal is 105,000. The interest now is calculated on 105,000. But when the buy down fees is added, the same example of 100,000 and 5,000, the total outstanding is 105,000, but interest is still calculated on 100,000 only. So this is the main difference, and over the period of the loan life cycle, this particular principal amount would be amortized as income to the loan account. So the both behaves the same way in amortization. So I have added some of the screenshots from the our implementation in Mifos X. So basically, this is a product screen. We have a deferred income recognition section in loan product, where we have given an option to enable income capitalization and enable buy down phase. So when we click this checkbox, we get three options. One is to select the income capitalized calculation type. So right now we have introduced only the flat, meaning it would be equal amortization, uh, uh, equal amortization throughout the period. And the income type also we have given option whether it can be a fees or an interest. So depending on the organization usage, they can select how they want that, like principal deferred income to be amortized, whether to a fee or a interest. So those are the options we have given at the product configuration page. The next is adding to the loan account. So when we go into any active loan and we have an option called capitalized income, when we click on that, we will get these parameters. So we just have to enter when we are doing the capitalized income, we'll select the what is the amount we are capitalizing as of that particular day. And classification, we have given an option to classify based on the organization or business need, and payment types, and we can submit. So from the loan account view, this is how it looks. This is the amortization screen. So the amortization screen is different for deferred income and buy down phase. So here you can see over the period of time, you can see literally all the amortization happening on the loan account. Okay. So the next is re-aging and re-amortization. This is a benefit what we give to the customer, overpaid, overdue customer. They can either re-age or re-amortize. So basically, what is re-aging is it completely restructures with a new set of installments from a given new date. To take an example, let's say this the customer had 5 installments to be paid. The green ones are he paid on time and the red ones he didn't pay, and right now he's on this date. So there are 2 installment overdue, and he comes and asks to reset the schedule and term with a valid reason, of course. Then when the reset happens, so system will retain the existing 2 installment as it is, and then it creates a new set of installment from the outstanding amount of the loan. Let's say if like 600 was outstanding of this 3 installment, so 600 divided by 6, so system will create $100 installment in 6 installments of $100 each. So it will have new installments, and it need not to be 6, though we have given option to specify the installment number as well. We can select it as a 3 installments or 8 installments or a 6 installments accordingly. So reamortization, what it does, it doesn't give that much flexibility as re-aging, but it simply moves all the overdue amount to the existing future installment. So in this case, 1 installment was overdue. Um, so let's say if $100 was overdue, the $100 would be equally split and added to the future 2 installments. So that is the re-aging and reamortization feature. Okay, so this is how adding these features from the loan account view screen looks. So as soon as we create a menu button on a loan view screen, we'll get plenty of options. In that, this is how we add buy down fee and capitalized income, but also we have re-age and re-amortization. When we click on re-aging, so it gives all the parameters to be entered. So as I said, it gives we have given an option to enter the number of installments. So number of installments we need to re-age this particular loan, and what is the frequency type. So it's not only the installments, we can also change the frequency. Let's assume if the loan was the monthly loan every 1 month, we can change it to weekly, bi-weekly, or 2 monthly, etc. So we can restructure completely under the re-aging feature, and we can select when this restructured loans schedules should start, and we will give the reason why we are doing the re-aging, and we will submit. But for re-aging, it's quite simple. Re-aging will happen only for the, it equally distributes all the overdue amount to the future installment. So we just have to say the reason, and that's it. So whatever extra notes what we need to capture, once we capture and submit, it will do the re-aging. So this is all about reamortization, re-aging. The next is the full term tranches, which is nothing but delayed captures. So as I said before, I can like quickly go to an example. Let's assume there was one disbursement happened with 4 installment, and a second disbursement happened after 1 installment. So what loan is doing is, so each disbursement will have its independent repayment schedule, right? So on under the same loan account. So now the disbursement 2 also will have 4 installments. So since 3 installments are overlapping, these 3 installments will be the sum of EMI of D1 and D2. D1 is only belongs to the disbursement 1, and the installment 5 will only be the EMI from disbursement 2. So this is a new installment would be added when we add a disbursement after first installment. Let's assume we added, like after 4 installments. Let's if we did a disbursement around here, so the system will create 4 more installments after that. So, and those 4 installments, since it is not overlapping, the EMI would be interest and everything would be calculated only based on the second disbursement. The key features of this is independent life cycle, that each disbursement will like has its own term and installments and flexible capture timing and merge installments. So overlapping period will automatically combine and some will be the new EMI. So this is a configuration screen in Mifos X. So we all know like there is a loan transfer configuration screen. We have added a new checkbox called like allow full term for each tranche. So when we click on this, so the full term tranche or delayed capture so would be enabled. So function wise, there is no changes. So if we just keep doing the disbursement, the system will keep extending the installments based on the number of installments configured in that loan product. So the next feature is the interest modification. So as I said before, this was an existing feature under the reschedule option, but it was only supported to cumulative strategy and for flat interest calculation types. We made some enhancements so where it can support both cumulative and progressive, and it can support declining and flat type of interest calculations as well. So I've taken a quick example to explain here. Let's assume we gave interest modification for in the month 3 when the loan was disbursed, the interest rate was 12%, and when the interest rate is changed to 10% on the month 3, the interest will be recalculated for installments which comes on month 4 and month 6, where the interest will be recalculated and new AMI would be generated for each future installments from month 4 on until the last installment. So this is the interest modification screen. We didn't change anything on the UI. So it was already available on the reschedule with the checkbox adjust interest rate for remainder of the loan. We have kept the same thing. No changes was made on the UI. So the next is the interest pause. So interest pause, whenever we give an interest pause between certain period, the no interest would be accrued or calculated between that period. System or Mifos X already supported moratorium or grace, where we could, like not collect any interest or accrue any interest. We accrue, but not collect any accrue for given periods. But the interest would be still accruing and would be collected in the future installments. But interest pause, we are giving a option where it behaves like an interest fee. There is no interest accrual itself. And where it can be used is whenever there are promotional offers, like given to the customer. For example, 0% interest for X days or something. We can use this interest pause features to support these kind of options in the loan product. So example is, let's say we have given 30-day promotional period. Uh, so from day 0 to day 30, there is no interest, meaning the interest is calculated on zero rate, and the interest will actually start calculating from 31st day, 31st day till the maturity. This is the loan addition screen. By default, this feature would be enabled, so there is no configuration or anything. On the active loan, if you go like to that menu option, there is a add interest pause. So when you click on interest pause, it gives like start date and end date. So we can give when the interest pause should start and when it should end. Oh, one more thing. So we support multiple interest pause as well. So let's assume if you added a interest pause from 1st January to 15th January, we can add one more interest pause from 1st February to 15th February. So, but only thing is like the dates should not overlap if there are multiple interest pause. Okay, so the next is the contract termination. As I said, this is just a phase 1 development. What we are doing is on the active loan, we are giving an option called contract termination. In any events, contract is terminated when there is a reschedule or a default or there is a contract breach and admin decides to terminate the contract. system gives an option to contract terminate with capturing the reason for the same. Once that is done, all the outstanding amount or rather all the future installment would be collectively become outstanding as one installment as of the contract terminated date. So any demand or principal or interest which was outstanding, system will create one final installment as of the contract terminated date, and the user has to pay or waive whatever the step the organization want to. They can take the action from there on. So that the loan state on final installment would be created with all the outstanding, and no interest accrual will happen thereafter. So in phase two, it can be extended to support automated closures. So meaning whenever a contract termination happens, depending on organization, we can close it as a write-off or close it as a obligation met, etc. So that can also be automated. Right now, since we are not doing any monetary transactions, so we are not posting any accounting entry for contract termination. But if we are planning to do automated closures, we can also do the automated accounting closures as well. And contract termination right now is reversible. We can undo a contract termination, but this can also be protected in going forward. From the screen wise, this is how the contract termination will look. So when we click on contract terminations, the system will calculate all the outstanding principal, interest, fees, penalty, and we just take the termination reason and we submit. So that's all about contract termination. So the next I wanted to talk about is the advance payment allocation rule. So this as I said, so this was initially developed in phase one, but we made some enhancement to support excess payment handling and and for interest handling as well. So I've taken one example where allocation priority is set in a way the outstanding penalties is the highest priority. It has to be collected first, and the second is the interest component, and the third is the principal component, and the last which should go to excess funds. And I've taken one example here where a payment of 500 is due, where this 500 has a portions of 50 penalty, 100 interest, and 350 principal. When a customer pays 200, so what it does as per the priority set, it will take 50 will go to the penalty portion first, and now 150 is remaining. In that 100 will go to interest portion, now 50 is remaining. It will go to principal. So this is how allocation works. So this is customizable, as I said. So you can simply drag and drop all the if you wanted the penalties to go back here, or if you want to make sure only the advance penalties to be collected, we can move up. So all this is customizable, and it is customizable at transaction type wise. We can say, okay, so the payment, whenever a repayment comes in, it has to follow this order. Let's say if a refund comes in, it has to collect first principal, then the interest, then outstanding. So whenever a refund of 500 comes in, it won't go to penalty directly. So if we take this example only, so it will first go to principal component, and then it will go to interest component and penalty. Let's assume if we had one more allocation priority set for another transaction type called refund, and the excess amount handling. What is excess amount handling is whenever a customer pays excess. Here in this case, the due was 500, right? If the customer paid 700, so what system will do? It will allocate all to this existing installment first. All the 500 would be allocated, but the 200 would be still pending to be allocated, which is nothing but excess. So how to handle this allocation of excess amount is what we have introduced recently, where we can allocate those to the next installment itself, or it can go and allocate to the last installment of the loan, or it can go to an hybrid where it can go to next and last as well. So those are the options what we have given. So coming to the screen wise, what I explained till now, so this is how we have implemented. In the loan product configuration, there is a like a field called the payment allocation. If you click on that, if you notice here, this is a plus mark. This is where we select and add different transaction type. I have added three here. One is the default. So when we select the default, you can see principal penalty fees portion into three types. One is the past due, and the second is the current due, and then the advance. We can just change the priority order and the allocation will happen accordingly. It's as simple as that. And on the top tab, if we select, okay, if we click on down payment, we can make the changes. Okay, it has to take first principal, then interest, then fees. But if for repayment, it has to take first fees and then interest and then principal. So each transaction level and the default, we can set the allocation. But the excess amount handling is happening from the last point here, where we can select the excess amount should go to the next installment, or the next to last, or the last installment. Okay. So now that we have covered all the main features what we have done with respect to the progressive loan handling. So the currently what we are working on is the merchant capital lending. So this is a work in progress. As I said, this is an open-ended loans where there are no fixed installments. There is no traditional term loan concept. So what we have done here is we are introducing this as a complete different loan module. So it won't be a part of existing loan product. So it will be a separate loan product altogether with its own specific parameters and configurations, etc. So how does working loan capital work in what we are building here is, let's assume a fund is dispersed to loan for the merchant. So based on the sales, merchant will do the repayment. So the repayment would be auto deducted uh, from the disbursement or the capital which is funded to him. And we also have a monitoring in place where we check the breach uh, of the payments, and we also monitor the reduced cash flow. If no cash flow is coming into the loan, we track that. So these are the key features with respect to the merchant capital lending. The first feature what we have introduced is the discount fee factor, where a fee is applied upfront on a transaction. Let's assume if a merchant requests for a loan of 10,000, so the organization will say, okay, so we will give a 10,000 loan, but a discount fee is around 1,000. So what organization will do, they will dispose 9,000, but the customer for the merchant will pay 10,000 back uh, at the end of the loan life cycle. So he gets 9,000, but he ends up paying 10,000. So that's how discount fee factor works. And the only thing here is he doesn't have to pay on a fixed term. There is no fixed EMI or allocation or a portions as such. So whenever there are two types, one is based on the cash, one is on the sales based, or whenever he has a amount in hand, he can pay and his outstanding will reduce accordingly. So, and coming to the income amortization, so whatever the discount fees added, right? So initially, so it has to be amortized over period of time. So that happens as a part of repayment. So whenever repayment happens, we have introduced the calculations based on EIR, where system will calculate the interest portion on the payment the user is make, or the customer, in this case merchant, is paying, and that specific amount would be considered as a income. And the breach management, delinquency management are all related to the monitoring side, where the continuous monitor happens on the overdue payments, overdue let's assume if is if he's breaching a contract, there would be contracts, right? So he has to pay certain amount in certain period. So they will be having some contractual agreement. So this breach management and delinquency management will monitor that and make sure the merchant pays on time the payments. So these were quite different from the regular delinquency because there are no fixed installments in this loan product. Okay, so last but not the least category what we have enhanced is the backbook migration. So we have now introduced a tracking activity where a audit trail is maintained for all the migrated loan, so that it's easy to backtrack and see like what loan was migrated and what transactions was added as a part of migration process. Excuse me. So, and a lot of backdated actions are supported with respect to backbook migration. So initially, many features when we develop, let's say, I spoke about interest, like modification and interest pause or capitalized fees or anything. When they were developed to support from a current date or as of current date. So we had to make a lot of calculation changes so that whenever a loan from a last year is created, which is still active, the system should be able to process these features or interest pause or a capitalized income. We should be able to add, and the interest calculation should happen as of that backdated date. So all the features which was not backdated support, we had to enhance it to support backdated actions and EMI and interest fix. So there are automated calculations and post. So basically, when we migrate, there would be some. There are chances the rounding issues or anything, the numbers might not tally. So we have made some enhancements so that we can fix the EMI or interest issues what is happening. And the COB. So the bad jobs, the close of business jobs, what we have, we had to make changes to that where it will process the existing loans as well. For example, the accrual. So when we create a loan as of last year, so we have enhanced our COBs to identify the migrated loans and process the accruals accordingly for the migrated loans as well. Okay. So this is the future roadmap what we have. Any
Yeah, and I
questions?
can speak to some of these areas, Bharath. So.
Yeah, thanks, Ed. Yeah. Over to you.
Okay, yeah, thanks, Bharat. That was a good comprehensive overview of the features. So just briefly wanted to give a small glimpse into some of the enhancements related to lending that the community will be working on over the coming months. So around usability, we're looking forward to addressing some of the concerns where as the number of features and parameters has grown within what you can configure around each loan product, it becomes overwhelming. So part of what we're planning to do is have pre-configured loan products as templates within the UI. So you can just select that loan product template and only have those parameters related to those specific scenarios available to configure. And then I think already in the UI, one of our contributors, Jay, has introduced a nice dashboard within the loan summary page, but we want to revamp in general that loan summary view to make it more user-friendly and have the key and relevant information. And then we're continuing our efforts just around the UI in general to make more of the components modular to ease that experience for developers, as well as help to enable more use cases to be powered. And then likewise, we want to extend support for our self-service applications to focus around being able to deliver an out-of-the-box customer loan portal. And then in terms of existing or expanding upon enhancing the products that are supported at the loan management level, we're looking forward to hopefully adding more native support for savings groups and other savings-led approaches like VSLA within the back end. And then likewise, we want to better articulate how we support different agricultural lending products and financing the value chain around agricultural related use cases. We have some contributions from an external partner in the community to enable better Sharia compliant Islamic finance products as well. that we're looking to merge in the coming months. And then with the better support for open-ended loan products, hoping to make inroads towards having line of credit support. And then lastly, to augment and complement all of the great functionality we have around loan management, we are looking to build out some more capabilities around onboarding, decisioning, risk assessment, and origination. And so we're grouping these under the brand of Mifos Lumina, but essentially we want to start to professionalize and harden a number of the different components and services our interns have been working on over the coming years. So we want to have deeper integration with different workflow engines. We want to bring in more of the work that you had worked on around credit bureau integration. And then we also have the work from Akshat and Priyanshu around our bank statement analysis module that we want to bring together. And then we also have the efforts that Abhinav led around the standalone risk assessment engine, where we also want to pull the previous credit scoring work. And that'll all tie nicely with the work Hossam did around the workflow engines. But look forward to more discussion around what we can do on the origination front. But yeah, let's move to that final slide for question and answer, Bharath. So. Yeah, so just before we open the floor to any questions in the last 2 minutes that we have, just want to mention that later on this upcoming week, we have our Ask Me Anything session related to all of our summer intern programs. So if you're a prospective intern that have questions, or if you're a mentor that want to share your ideas, or you want to possibly contribute to our intern programs, please join that session by scanning the QR code. But yes, feel free to share a question in the Q&A if you have it, or if you want to raise your hand, we can take you off mute. I want to thank Bharat for this. We'll circulate the recording, and then all of the changes that we've described, apart from what's work in progress around the merchant lending and open-ended loan products, all of that, apart from that, has been available in the upstream platforms, and we're making sure soon there's corresponding documentation around each of it. But let's open the floor to whatever questions there might be. So. Yeah, if there's no questions, I'll just mention, that I think we have them on the community calendar, but we will be having a number of road mapping sessions coming up as well to help with the roadmaps around the back end, like our mobile applications, the UI, etc. Oh, yeah, and then the
Yeah, we have.
question from Vishwas. Oh, yeah, go ahead, Bharat, I'll let you answer. Or do you want to just repeat the question? So the question from Vishwas was, is there a plan to support setting an interest rate and a term for each tranche independently, i.e. full flexibility for amortizing each tranche? And I'll let you respond, Bharat.
So interest rate, we don't have, like separately for each tranche, because, like multiple installments, if the installments overlap between the tranche, the installments are getting summed up. So we didn't give an option to specify the installment at each tranche disbursement level as of now. But yeah, that would be a good option where each disbursement can we if we can specify then specific interest rate as of that particular disbursement, but it's not available as of now.
Yeah, thanks for that great question, Vishwas. Yeah, so one last call. Oh, and then Francis, I see your hand raised. Let me allow you to verbalize your question. Francis, I think you should be able to come off mute and speak.
My audio audible?
Yeah, we can
Yes,
hear
we
you.
can hear you, Francis.
Thank you. Thank you. Thank you very much for the work done with the tranche disbursements, whether you'll also include floating rates, or is that too much to ask?
Yeah, currently floating rate is something we haven't supported, but as you know, like we have interest modification enhanced, so which can be a possible workaround can be used. But if you're talking about the floating rate as a feature which is available already, And to support that with the new enhancements what we have made, it's currently not available as of now.
Thank you.
Okay, yeah, but thank you, Francis, for raising that, and thank you as well, Vishwas. We'll, add those as potential gaps or items in the backlog that could be considered to be worked on. Okay, but I want to thank Bharath for leading us during today's session. We'll circulate the recording of today's webinar soon, but thank you everybody for attending, and keep tracking the calendar for upcoming webinars and sessions we'll be having for the rest of the community. Thank you all. Have a nice weekend. Bye-bye.
Thank you all. Have a nice weekend.